Real Estate Exam Questions and Answers 2026. Question 1. Which sequence best describes the basic procedure followed in an escrow arrangement? Option A. The parties agree, select an escrow agent to satisfy contract conditions, and the escrow agent disperses the asset. Option B. The buyer records the deed first, then negotiates the purchase terms with the seller. Option C. The lender appoints a trustee, collects rent, and releases title after 1 year. Option D. The broker receives commission first, then the parties prepare the purchase contract. The correct answer is option A. The correct answer is the parties agree, select an escrow agent, satisfy contract conditions, and the escrow agent disperses the asset. 1. Two people agree to enter into a transaction with an escrow agent to select the escrow agent. 3. The conditions of the contract are met for escrow agent disperses the asset. Question 2. On which of the following documents would you expect to see a legal description of a property? Option A. The deed. Option B. The mortgage note. Option C. The listing agreement. Option D. The closing disclosure. The correct answer is option A. The deed. The deed. Question 3. In meets and bounds terminology, how many measuring rods add up to a chain? Option A. 4. Option B. 2. Option C. 8. Option D. 16. The correct answer is option A. 4. Question 4. What type of action is a special lawsuit started to clear title to real property? Option A. Quiet title action. Option B. Partition action. Option C. Specific performance action. Option D. Foreclosure action. The correct answer is option A. Quiet title action is completed. The judgment of the court can be recorded in the land records office where the property is located, providing notice that the title has been cleared. Question 5. What is the name of the federally mandated pamphlet that must be given to renters and buyers of homes built before 1978? Option A. Protect your family from lead in the home. Option B. Lead-based paint seller certification. Option C. Residential lead disclosure and inspection guide. Option D. Federal Housing Safety Notice for older homes. The correct answer is option A. Protect your family from lead in the home. Protect your family from lead in the home is required to be given to buyers and renters of homes built before 1978. It is available online in a variety of languages. The other pamphlets listed above do not exist. Question 6. Under agency law, when is a broker authorized to accept a deposit without needing separate buyer instructions? Option A. When authorized in a listing agreement. Option B. When the broker verbally promises to protect the money. Option C. When the buyer asks the broker to hold the deposit at home. Option D. When the seller has not yet accepted the offer. The correct answer is option A. The correct answer is when authorized in a listing agreement. Only in a listing agreement is the broker authorized to accept a deposit. Without this agreement, the broker must either follow the buyer's instructions or place the deposit into a trust account. Question 7. A broker may legally pay all or part of a real estate commission to. Option A. The broker's own sales agent. Option B. An unlicensed friend who provides a lead. Option C. The buyer who asks for a referral fee. Option D. The seller's relative who recommends the property. The correct answer is option A. The broker's own sales agent. Brokers may share commissions only with their own salespersons and associate brokers, or with other licensed brokers. Question 8. Maria, a licensed broker, does not think the seller will seriously consider an offer she received for 15% less than the listing price. Maria should. Option A. Submit the offer to the seller. Option B. Wait for a stronger offer before responding. Option C. Refuse to present the offer because it is below list price. Option D. Ask the buyer to withdraw the offer. The correct answer is option A. Submit the offer to the seller. All offers should be immediately submitted to the principal. Question 9. The Americans with Disabilities Act of 1990 would affect which of the following? Option A. Multi-family home with 3 units. Option B. A single-family home. Option C. An existing business with 30 employees. Option D. A third-floor apartment in a newly constructed apartment complex. The correct answer is option C. An existing business with 30 employees. The Americans with Disabilities Act of 1990 seeks to accommodate those with disabilities by broadening their access to public facilities. Any existing business with 50 or more employees must update their facility to conform with Americans with Disabilities Act rules and regulations. Almost all new construction, except single-family homes, must be handicap accessible. Newly constructed ground-floor apartments are subject to Americans with Disabilities Act regulations, while those on higher levels are not. As of 1988, multifamily buildings with 4 or more units must comply with Americans with Disabilities Act standards. Question 10. According to Department of Housing and Urban Development standards, which of the following would be an acceptable neighborhood advertisement? Option A. Senior housing. Option B. Traditional living. Option C. Exclusive neighborhood. Option D. Bachelor community. The correct answer is option A. Senior housing indicative of race, religion, color, familial status, sex, handicap, or national origin are not acceptable, nor are words that could be considered discriminatory, such as exclusive, restrictive, traditional, or board-approved. Housing intended to serve those 55 and older is acceptable according to Department of Housing and Urban Development standards. Question 11. Capitalization of income attributable to real property is best defined as option A. Cost, option B. Price, option C. Present value of a property based upon its future benefits, option D. Attractiveness and location. The correct answer is option C. Present value of the property based upon its future benefits. Capitalization of income can be defined as the present value of future benefits attributable to a property. Question 12. What is the purpose of a deed? Option A. To convey property ownership from one person to another. Option B. To pledge property as collateral for repayment of a loan. Option C. To estimate the market value of a property. Option D. To create a broker-client employment contract. The correct answer is option A. To convey property ownership from one person to another. Deed is a written instrument by which an owner of real estate intentionally conveys a right, title, or interest in a parcel of real estate. Question 13. When an agent represents the buyer and not the seller of a property, he or she is engaging in option A. Buyer agency. Option B. Seller agency. Option C. Sub-agency. Option D. Property management. The correct answer is option A. Buyer agency. Buyer agency is the term used for representation in a real estate transaction. The principal in this case is the buyer, who gives legal authority to the agent to act on his behalf when dealing with a third party. Question 14. Commissions are usually earned when? Option A. When the seller accepts the buyer's offer without conditions. Option B. When the buyer first views the property. Option C. When the lender orders an appraisal. Option D. When the deed is recorded after closing. The correct answer is option A. The correct answer is when the seller accepts the buyer's offer without conditions. The seller accepts the buyer's offer without conditions. Commissions are usually earned when the seller accepts an offer from a ready, willing, and able buyer. Question 15. Midborough Property Management is contracted to receive 10% of the monthly rental income collected at the Dunbar Apartments. The monthly rent roll for the property is $55,000. One tenant only paid $250 of his $1,000 monthly rent, and 3 tenants skipped out on their $1,000 monthly rents. How much is Midborough Property Management owed? Option A, $5,125. Option B, $5,500. Option C, $5,250. Option D, $4,875. The correct answer is option A. The correct answer is $5,125. $5,125. Midborough is owed $5,125. Since the agreement states that Midborough will collect 10% of the total monthly income collected, Midborough will receive 10% of $51,250 because one tenant shorted his monthly payment by $750, and 3 tenants did not pay their monthly rent of $1,000 each. $55,000, $750, $3,000 equals $51,250 collected rent. $5,150 x. That 10 equals $5,125 management fee. Question 16. When Charles does not assert his rights when there is an encroachment on his property, such as a neighbor's garage straddling his property line, this is called option A, doctrine of lashes. Option B, doctrine of merger. Option C, statute of frauds. Option D, rule of capture. The correct answer is option A, doctrine of lashes. Doctrine of lashes. The doctrine of lashes pertains to the lack of assertion of one's rights, whereby those rights may be lost in a lawsuit. Question 17. Which statement regarding a Veterans Affairs Department of Veterans Affairs mortgage is false? Option A, it does not have minimum property requirements. Option B, it does not require mortgage insurance. Option C, it does not require a down payment. Option D, it does not have a maximum debt ratio. The correct answer is option A. It does not have property requirements. The statement is false because Department of Veterans Affairs loans do have minimum property requirements and PRs to ensure the home is safe, sound, and sanitary. These requirements protect both the veteran and the lender by ensuring the property is a good investment and a suitable living environment. Question 18. A Department of Veterans Affairs mortgage is option A, always a recourse loan. Option B, guaranteed. Option C, conventional. Option D, prepaid. The correct answer is option guaranteed. B, guaranteed. A Department of Veterans Affairs mortgage is a guaranteed loan, meaning the U.S. Department of Veterans Affairs guarantees a portion of the loan to the lender. This allows veterans, active duty service members, and certain members of the National Guard and Reserves to obtain loans with favorable terms, such as no down payment or private mortgage insurance. Question 19. Garrett sold his primary residence for $595,000, which was a capital gain of $315,000. How much may Garrett exclude on his income tax as a single individual? Option A, $315,000. Option B, $100,000. Option C, $476,000. Option D, $250,000. The correct answer is option D, $250,000 as a single individual. Garrett can exclude up to $250,000 of capital gains on the sale of his primary residence, provided he meets the eligibility requirements, such as living in the home for at least 2 of the last 5 years before the sale. Since Garrett's capital gain is $315,000, he can exclude $250,000, and the remaining $65,000 would be subject to capital gains tax. Question 20. The parcel of land is 140 feet by 75 feet, and the seller is asking $130 per square foot. What is the asking price? Option A, $1,050,000. Option B, $1,365,000. Option C, $1,470,000. Option D, $1,650,000. The correct answer is option B, $1,365,000. The asking price is $1,365,000, calculated by multiplying the area of the land 140 feet by 75 feet by the price per square foot $130. Question 21. For this question, disregard selling costs, taxes, etc., and choose the closest answer. A parcel of land is sold for $163,000. If it appreciates at 14% compounded per year and the seller keeps it for 7 years, how much will the seller pay for it? Option A, $72,000. Option B, $70,500. Option C, $65,000. Option D, $55,000. The correct answer is option C. The correct answer is $65,000. Define how much is it originally paid for the land. We use the formula for compound interest equals P. 1 RT equals P. 1 RT. It is the future value. $163,000 P is the initial purchase price. What we want to find out are the annual RT conveyed 0.14 today. The times and you rearrange the formula to solve for P equals 1 to RT. P equals 1 to RT. Substitute the values. P equals 163,001 plus 0.147. P equals 1 plus 0.147,163,000. Calculate the denominator. 1.147 2.5023 1.147 2.50 23. Now divide P equals 163,000,050,365,130. P equals 2.502316,365,130. The closest answer, $65,000. Question 22. The Johnsons sold their house and will close on July 1. The Johnsons paid their full annual town taxes in January. Which statement best describes what will occur at closing? Option A. The buyers will owe the Johnsons the unused tax for the balance of the year. Option B. The Johnsons will owe the buyers the tax due. Option C. Nothing will happen. Option D. The Johnsons will owe the buyers half of the tax due. The correct answer is option. The buyers will owe the unused tax for the balance of the year. Since the Johnsons paid the full year's property taxes in January and are selling the house mid-year, they've effectively prepaid taxes for the months they won't own the property. At closing, the buyers will reimburse the Johnsons for the portion of taxes covering July through December. Question 23. Jessie signs a deed to Miriam as grantee, has it acknowledged, and receives payment from her. Jessie arranges to meet Miriam the next afternoon to give the deed to her. Which of the following best describes when Miriam will own the property? Option immediately because she has paid for it. Option B, the next afternoon when she receives the deed. Option C, when she records the deed. Option D, as soon as she signs the deed. The correct answer is option B. The next afternoon when she receives the deed. Ownership transfers when the deed is delivered and accepted. Even though Jessie signed and acknowledged the deed and received payment, the transfer isn't complete until Miriam physically receives the deed or it's otherwise delivered to her. Recording the deed is important for public notice, but not necessary to transfer ownership. Question 24. Federal Housing Administration's Section 8 program helps low and moderate income people by Option A, paying their mortgage loans. Option B, insuring their mortgage loans. Option C, paying the maintenance on a purchased home. Option D, paying part of their rent. The correct answer is option D, paying part of their rent. Federal Housing Administration Section 8 program, also known as the Housing Choice Voucher Program, helps low and moderate income individuals and families by providing rental assistance. It pays a portion of the rent to landlords, helping tenants afford housing in the private rental market. Question 25. What percentage of a building's replacement value must be covered by fire insurance according to typical coinsurance process? Option A, 50%. Option B, 60%. Option C, 70%. Option D, 80%. The correct answer is option D, 80%. According to typical coinsurance clauses in fire insurance policies, a building must generally be insured for at least 80% of its replacement value. This requirement ensures that the insured party is sufficiently covered in case of a loss, and it helps avoid penalties for underinsurance. Question 26. A deed is valid only when it is: Option A, delivered and accepted. Option B, recorded. Option C, seen. Option D, notarized. The correct answer is option A, delivered and accepted. A deed becomes valid when it is delivered by the grantor seller and accepted by the grantee buyer. While recording, signing, and notarizing may be important for various legal and practical reasons like providing public notice or ensuring validity, delivery and acceptance are the key elements required for a deed to be legally effective. Question 27. Malcolm just received his salesperson's license and has joined a firm. He will most likely be hired for tax purposes as an Option associate broker. Option B, salaried employee. Option C, independent contractor. Option D, realtor. The correct answer is option C, independent contractor. Most real estate salespeople, including Malcolm, are hired as independent contractors rather than salaried employees. This arrangement allows for greater flexibility, and brokers typically don't withhold taxes or provide benefits, as the salesperson is responsible for their own taxes and expenses. Question 28. Real estate license laws are designed to: Option A, raise tax and operating revenue for state and local governments. Option B, limit the number of brokers and salespersons on the market. Option C, match the federal government's requirements. Option D, protect the public and maintain high standards. The correct answer is option D, protect the public and maintain high standards. Real estate license laws are primarily designed to protect the public by ensuring that real estate professionals meet certain standards of competence and ethical conduct. These laws aim to promote fair practices and to ensure that transactions are handled properly, thereby maintaining public trust in the real estate industry. Question 29. When a broker is retained by the buyer, the broker owes the prospective seller: Option of obedience to lawful instructions. Option B, confidentiality about the seller's financial situation. Option C, honest, straightforward treatment. Option D, undivided loyalty. The correct answer is option C, honest, straightforward treatment. When a broker is retained by the buyer, the broker owes the prospective seller honest, straightforward treatment. This means the broker must deal with the seller honestly and ethically, but the broker's primary duty is to the buyer, not the seller. Question 30. Sandy, a 16-year-old, enters into a contract to buy a condo from Sue, an adult. Which statement is true? Option A. Sandy can void any portion of the contract any time before the transaction is closed. Option B. Sandy or Sue can void the entire contract any time before the transaction is closed. Option C. Sandy can void the entire contract any time before the transaction is closed. Option D. The contract is considered void because Sandy is not permitted to enter into a real estate contract. The correct answer is option C. Sandy can void the entire contract any time before the transaction is closed. Since Sandy is a minor 16 years old, she has the legal right to disaffirm void the contract at any time before reaching the age of majority, usually 18, depending on the jurisdiction. In most cases, a minor's contract is considered voidable, meaning they can choose to void it. However, Sue, the adult, cannot void the contract simply because Sandy is a minor. Question 31. A listing agreement between a principal and broker is an: Option A, implied contract. Option B, breach of contract. Option C, express contract. Option D, discharge of contract. The correct answer is option C. Express contract. Express contract. The listing agreement between a principal, the seller, and a broker is an express contract, meaning the terms and conditions of the agreement are clearly stated and agreed upon by both parties, either in writing or verbally. In real estate, these agreements are typically in writing to ensure clarity and legal enforceability. Question 32. Which option best describes an exclusive right to sell listing? Option A. The listing agent will be paid a commission only if he or she procures the buyer. Option B. The agent who procures the buyer will be compensated. Option C. The listing agent only receives commission if the property sells for a certain amount. Option D. The listing agent will be paid the commission no matter who procures the buyer. The correct answer is option D. The listing agent will be paid the commission no matter who procures the buyer. In an exclusive right to sell listing, the listing agent is guaranteed a commission if the property sells, regardless of whether the listing agent or another agent brings the buyer. This type of listing agreement provides the most protection and incentive for the listing agent. Question 33. If a buyer's earnest money check is returned for insufficient funds after being deposited into the broker's trust account, the broker should: Option A. Resign the agency. Option B. Cover the bad check personally. Option C. Tell the seller or cooperating broker that the check bounced. Option D. File a police report. The correct answer is option C. Tell the seller or cooperating broker that the check bounced if the buyer's earnest money check is returned for insufficient funds. The broker must inform the seller or cooperating broker immediately. This is important to ensure transparency and allow the parties involved to take appropriate action, such as requesting a new earnest money deposit or deciding whether to continue with the transaction. Question 34. The contract of sale states that the earnest money deposit is to be placed in an interest-bearing account with any interest earned to be given to the buyer. This is option A. Illegal. Option B. Not okay, and the broker should resign the listing. Option C. Okay, because the buyer and seller have agreed to this. Option D. Commingling. The correct answer is option C. Okay, because the buyer and seller have agreed to this. Both the buyer and the seller have mutually agreed in the contract that the earnest money deposit will be placed in an interest-bearing account and that the interest earned will be given to the buyer, then this arrangement is acceptable. It is important that this agreement is clearly stated in the contract to avoid any misunderstandings. Question 35. Charles wanted to offer to purchase Tony's home and engaged Mary to be his agent. When the offer was delivered to Tony, it had a provision limiting the time for acceptance to 48 hours. Tony rejected the offer. After thinking about it for 36 hours, Tony decided he wanted to do the deal. Which of the following best describes the status of the contract? Option A. It is still open because Tony changed his mind under 48 hours. Option B. It is still open because Charles has not formally withdrawn the offer. Option C. It was terminated when Tony first rejected the offer. Option D. It is a binding contract now that Tony has accepted the offer. The correct answer is option C. It was terminated when Tony first rejected the offer. When Tony rejected the offer was effectively terminated, and it could not be accepted later. Even though the original offer had a 48-hour time limit for acceptance, once it was rejected, the offer was no longer valid, and Tony's subsequent change of mind does not revive the offer. Question 36. Mark, a licensed broker, conveys an offer from his client to Janet, a licensed agent, wherein Mark's client wishes to purchase a 200-acre farm from Janet's client for $500,000, 2 5-year-old tractors, and 200 sheep. What would the consideration offered by Mark fall under? Option A. Valuable. Option B. Inadequate. Option C. Good and valuable. Option D. Good. The correct answer is option A. Valuable. In this case, the consideration offered by Mark includes both money, $500,000, $100,000 in personal property, the 2 5-year-old tractors and 200 sheep. This is considered valuable consideration, as it involves a tangible value being exchanged for the property. Question 37. The amount of commission a broker shares with his or her agent is option A, negotiated between the broker and agent. Option B, dictated by the National Association of Realtors. Option C, split 50-50 between the broker and agent. Option D, dictated by federal law. The correct answer is option A, negotiated between the broker and agent. The commission split between a broker and agent is typically negotiated between them and can vary depending on the terms of their agreement, the agent's experience, and the brokerage policies. It is not dictated by external organizations like the National Association of Realtors. National Association of Realtors, federal law, were set at a fixed percentage like a 50-50 split. Question 38. The listing agreement whereby a principal lists property for sale with a number of brokers is known as an option A, exclusive agency. Option B, open listing. Option C, exclusive right to sell. Option D, net listing. The correct answer is option B. The listing agreement whereby a principal lists property for sale with a number of brokers is known as an open listing. In an open listing, the property owner can work with multiple brokers, and only the broker who successfully finds a buyer will earn the commission. The owner is also free to sell the property themselves without owing a commission to any broker. Question 39. When an agreement of the parties is demonstrated by their acts or conduct, this is known as what type of contract? Option A, express. Option B, voidable. Option C, implied. Option D, unilateral. The correct answer is option C. When an agreement of the parties is demonstrated by their acts or conduct, this is known as an implied contract. An implied contract is formed when the actions, behavior, or circumstances of the parties suggest that a contract exists, even though there is no formal written or spoken agreement. For example, if someone orders food at a restaurant and eats it, their conduct implies they agreed to pay for the meal. Question 40. Federal Housing Administration. Federal Housing Administration insures various types of loans to provide housing except for the following type of loan. Option A, nursing home mortgage loans. Option B, construction loans. Option C, multifamily housing loans. Option D, mobile home loans. The correct answer is option A, nursing home mortgage loans. The Federal Housing Administration. Federal Housing Administration insures various types of loans, such as construction loans, multifamily housing loans, and mobile home loans, but it does not typically insure nursing home mortgage loans. Federal Housing Administration primarily focuses on residential and multi-unit housing that is intended for family living. Question 41. A mortgage which requires a large final principal payment can be best described as an option of blanket mortgage. Option B, balloon mortgage. Option C, open mortgage. Option D, variable rate mortgage. The correct answer is option B, balloon mortgage. A balloon mortgage requires a large final principal payment, often at the end of a loan term. This payment is much larger than the regular payments made during the loan's life. The loan is typically structured with smaller payments for a certain period, followed by the balloon payment to pay off the remaining balance. Question 42. In order for a seller of a property to realize the final net amount of $362,000 after paying the broker's commission of 6%, what must the minimum sales price be rounded to the nearest dollar? Option A, $332,180. Option B, $385,106. Option C, $371,280. Option D, $364,208. The correct answer is option B. The correct answer is $385,106 to determine the minimum sales price that would allow the seller to net $362,000 after a 6% broker's commission. We can use the following formula. Net amount equals sales price minus sales price times commission percentage. Let the sales price be X dot 362 equals X times 1 minus 0.063. 162,000 equals X times 0.94. Now solve for Roman 20 equals 362,000 or 0.94x plus 385,106b. $385,106. Question 43. A broker is about to receive a 7% commission on the sale of a $750,000 home. What will be the broker's commission? Option A, $5,250. Option B, $26,250. Option C, $52,500. Option D, $45,000. The correct answer is option C. The correct answer is $52,500. Commission equals sales price times commission rate given. Sales price equals $750,000. Commission rate equals 7% or 0.07. Commission equals 750,000 times 0.07 equals 52,500. So the broker's commission will be $52,500. $52,500. Question 44. Which valuation approach is used when appraising a single-use property when sales of comparable properties are not available? Option A, income approach. Option B, cost approach. Option C, anticipation factor. Option D, cap rate approach. Cost approach. The correct answer is option
Cost
B.
approach.
The cost approach is typically used when appraising a property that has a unique or single use and there are no comparable sales available. This approach estimates the value by calculating the cost to replace the property, subtracting depreciation, and adding the value of the land. Question 45. The Real Estate Settlement Procedures Act. Real Estate Settlement Procedures Act explicitly prohibits an agent from paying kickbacks or unearned fees. The Act does not prohibit A. Option A, referral fee from an insurance agent. Option B, fee to a furniture supplier. Option C, brokerage referral fee. Option D, fee to a moving company. The correct answer is option C.
Brokerage referral
The Real Estate Settlement Procedures Act. Real Estate Settlement Procedures Act prohibits kickbacks and unearned fees that could result in higher costs for the consumer. However, it does not prohibit a brokerage referral fee as long as it is properly disclosed and complies with the regulations set by Real Estate Settlement Procedures Act. These fees must be for actual services rendered and should be disclosed to all parties involved. Question 46. A notary's acknowledgement of the signature on a deed is necessary. Option A, for the deed to be valid. Option B, for the deed to be recorded. Option C, before transfer tax can be paid. Option D, to give constructive notice of the transfer. The correct answer is option B.
For the deed to be recorded.
A notary's acknowledgement of the signature on a deed is necessary primarily for the deed to be recorded in the public records. While the deed may still be valid without an acknowledgement, having it notarized ensures that it can be officially recorded, providing public notice of the transfer of property ownership. Question 47. Glenda, a prospective tenant of the Astor Apartments, chirped while looking at a vacant apartment. Expenses for Glenda's injuries are covered by the property owners. Option A, casualty insurance. Option B, fire and hazard insurance. Option C, liability insurance. Option D, contents and personal property insurance. The correct answer is option C.
Liability
insurance. Liability insurance covers a property owner in the event that someone is injured on their property, such as Glenda's injury while looking at the vacant apartment. This insurance helps cover medical expenses and other liabilities arising from accidents or injuries that occur on the property. Question 48. The 6 categories of real property are residential, commercial, industrial, agricultural, special purpose, and option of farmland. Option B, government property. Option C, multifamily. Option D, mixed use. The correct answer is option B, mixed use. Mixed use. Question 49. If Billy owns his home free and clear of encumbrances and has the right to devise it to his daughter, he owns an option A, life estate. Option B, fee simple estate. Option C, estate at will. Option D, leasehold. The correct answer is option B, fee simple estate. Fee simple estate. A fee simple estate is the highest and most complete form of property ownership. It gives the owner full control of the property, including the right to sell, lease, or devise the property to others, as Billy can with his daughter. Question 50. Which type of deed does not contain covenants or warranties? Option A, trust. Option B, reconveyance. Option C, quitclaim. Option D, warranty. The correct answer is option C. Quitclaim. A quitclaim deed does not contain covenants or warranties. It transfers the interest or claim that the grantor has in the property to the grantee, but it makes no guarantee as to the validity of that interest or claim. The grantor does not promise that the title is clear or free of defects. Question 51. How frequently should the contract between a broker and an independent contractor be renewed? Option A, every 9 months. Option B, every year, but no later than 15 months from the previous one. Option C, every 2 years. Option D, every 3 years. The correct answer is option B, every year, but no later than 15 months from the previous one. Contract between a broker and an independent contractor, such as a real estate agent, typically needs to be renewed annually, but it should not exceed 15 months from the date of the previous contract. This ensures that the agreement remains current and complies with legal or regulatory requirements. Question 52. Kathy purchased a house in 1985 for $20,500. Kathy knows properties had appreciated and asks the broker to sell it for $200,000. The broker knows the value could be more than $300,000. The broker should do which of the following? Option A, take the listing as offered and sell it quickly. Option B, purchase the house himself for $200,000, fully identifying himself as a licensed broker. Option C, buy the house through his aunt, who has a different last name. Option D, tell Kathy the house is worth much more. The correct answer is option D. Tell Kathy the house is worth much more. As a licensed real estate professional, the broker has an ethical obligation to provide accurate and honest advice to clients. If the broker knows the property is worth more than what Kathy is asking, the broker should inform her so that she can make an informed decision about pricing the property. The broker should never mislead a client or fail to provide full information regarding the market value of the property. Question 53. Selling a home does not relieve the seller from defects to the property that affect the value when: option A, known to the seller. Option B, repairs will exceed $20,000. Option C, hazardous materials are found. Option D, the home was built before 1958. The correct answer is option A, known to the seller. Selling a home as is does not relieve the seller from disclosing known defects that affect the value of the property. Even if the property is sold as is, the seller must still disclose any material defects they are aware that could significantly affect the property's value or safety. This is a requirement under most real estate laws and regulations. Question 54. A buyer, before any binding contract of sale is signed, is entitled to receive a property condition disclosure statement from the seller, and option A, any buyer who does not receive a statement is entitled to a $10,000 cashier's check from the seller at the closing. Option B, the seller's agent is obligated to assist in filling it out. Option C, whether or not the seller provides the disclosure form has no effect on the seller's liability for undisclosed defects. Option D, the licensee must inform the seller of the seller's legal rights and obligations regarding filling out the form or ignoring it. The correct answer is option D. The licensee must inform the seller of the seller's legal rights and obligations regarding filling out the form or ignoring it. The licensee must inform the seller of the seller's legal rights and obligations regarding filling out the form or ignoring it. The licensee real estate agent has a duty to inform the seller of their legal obligations regarding the property condition disclosure statement. While the seller is typically required to fill out and provide this disclosure to the buyer, the agent must ensure the seller understands their responsibilities under the law. Question 55. Contract law requires earnest money be submitted with a contract of sale in the following amount. Option A, 15% of the selling price. Option B, 10% of the offer. Option C, at least $2,000. Option D, no earnest money is required to form a contract. The correct answer is option D. No earnest money is required to form a contract. Earnest money is not legally required to form a valid contract. However, it is typically used as a good faith gesture from the buyer to show their intent to follow through with the transaction. The amount of earnest money is negotiable and can vary depending on the terms of the contract. If no earnest money is provided, the contract can still be valid as long as all other essential elements of the contract are in place. Question 56. When a contract of sale is signed and the buyer's earnest money check is deposited in the special account, the money belongs to Option A, nobody until the transaction is either completed, rescinded, or breached. Option B, the buyer as a rebate for the purchase. Option C, the seller as a portion of his or her capital gain. Option D, the licensee as a prepayment of the commission. The correct answer is option A. Nobody until the transaction is either completed, rescinded, or breached. When earnest money is deposited into a special trust account, it is held in escrow until the terms of the contract are fulfilled or the transaction is rescinded or breached. The money does not belong to either party, buyer or seller, until the conditions are met, at which point it can either be applied to the purchase price or returned, depending on the outcome of the transaction. Question 57. In the listing agreement, the broker agrees to do his best to procure a buyer. This describes which of the following contract attributes. Option A, consideration. Option B, legally competent parties. Option C, lawful purpose. Option D, mutual agreement. The correct answer is option B. Mutual agreement. That the broker agrees to do his best to procure a buyer demonstrates mutual agreement in a contract. This refers to the meeting of the minds, where both parties agree to the terms and conditions of the contract, which in this case includes the broker's obligation to try to procure a buyer. Question 58. All of the following events would terminate a listing agreement except Option B, the death of the seller. Option B, the broker's bankruptcy. Option C, a kitchen fire on the property. Option D, restricted access to the property. The correct answer is option C. The kitchen fire on the property. Kitchen fire would not automatically terminate a listing agreement. While it might affect the property's value or condition, the listing agreement typically remains in effect unless another event occurs that would legally void it, such as the death of the seller, the broker's bankruptcy, or restricted access to the property preventing the broker from showing it. Question 59. A broker negotiated a sale at $400,000. The buyers need a mortgage of $360,000. The lender will approve only an 80% loan-to-value mortgage. The broker prepares a fake second contract of sale with the purchase price of $450,000, has both parties sign it, and completes the contract. Which of the following answers best describes what just happened? Option A, the broker is properly putting the buyer's interests first. Option B, the buyers and the sellers have no liability because they follow the broker's guidance. Option C. The broker, the buyers, and the sellers are committing fraud. Option D. The broker is entitled to a commission based on $450,000. The correct answer is option C. The buyers and the sellers are committing fraud. Creating a fake contract with a false purchase price is fraudulent behavior. This act of misrepresentation can lead to legal consequences for all parties involved. The broker, the buyers, and the sellers. Fraudulent actions in real estate transactions are illegal and can result in penalties, including fines and loss of professional licenses. Question 60. The metes and bounds and monuments of a property can be found in what clause in a deed? Option A. Demising. Option B. Offense. Option C. Description. Option D. Habedan. The correct answer is option C. Description. The description clause in a deed includes the metes and bounds and monuments that precisely define the property's boundaries. This clause provides a legal description of the property to distinguish it from other properties. Question 61. A seller's broker must disclose to a prospective buyer that the option A heating system doesn't work. Option B. Last owner was murdered there. Option C. Seller has AIDS. Option D. House is haunted. The correct answer is option A. Heating system doesn't work. A seller's broker must disclose material defects or issues that affect the value of the property, such as a malfunctioning heating system. The other options, such as the last owner being murdered, the seller having AIDS, or the house being haunted, typically do not need to be disclosed because they are not considered material defects under real estate laws, though some jurisdictions may have specific rules regarding disclosure of such information. Question 62. Son is mortgage loan is an amortizing loan. What does this mean? Option A. Son is monthly payments include principal and interest. Option B. Son is monthly payments are less than interest. Option C. Son is final mortgage payment will be large. Option D. Son is loan amount exceeds Federal National Mortgage Association guidelines. The correct answer is option A. Son is monthly payments include principal and interest. An amortizing loan means that each of Son is monthly payments includes both principal and interest. Over time, the portion of the payment that goes toward the principal increases, while the portion going toward the interest decreases. This type of loan reduces the balance of the loan throughout the life of the loan. Question 63. Gail and Bobby have applied for a Federal Housing Administration loan. The mortgage will be option A backed by the full faith and credit of the U.S. government. Option B insured by Federal Housing Administration through the Department of Housing and Urban Development, Department of Housing and Urban Development. Option C guaranteed by the federal government at no cost to the borrower. Option D paid for by private mortgage insurance premiums. The correct answer is option B. The correct answer insured by Federal Housing Administration through the Department of Housing Development, insured by Federal Housing Administration through the Department of Housing and Urban Development, Department of Housing and Urban Development. A Federal Housing Administration loan is insured by the Federal Housing Administration, which is part of the Department of Housing and Urban Development, Department of Housing and Urban Development. This insurance protects lenders in case the borrower defaults on the loan, allowing the borrower to secure a loan with a lower down payment. Question 64. An agent sells another firm's listing for $950,000. The 7% commission is split 50-50 between the two companies. The agent received 60% of her broker's share. How much does she receive? Option A. $11,619.75. Option B. $13,237.50. Option C. $19,950.00. Option D. $10,850.00. The correct answer is option C. The correct answer is $19,950.00. Total sets. Agent's share. The agent received 60% of her brokerage. 43,250 times 0.6 equals 19,950. So the agent will receive C. $19,950. Question 65. Andrew leased 4 apartments in the Langston Apartments for a total monthly rent of $4,500. If this figure represents an 8% annual return on Andrew's investment, what was the original cost of the property? Option A, $675,000. Option B, $450,000. Option C, $54,000. Option D, $56,250. The correct answer is option A. The correct answer is $675,000. Monthly rent income, $4,500. Annual rent income, $4,500 times 12 equals $54,000 per year annual return. 8% 0.08. The 8% return represents the annual rent as a percentage of the original cost. So the formula to find the original cost is original cost equals annual rent income or annual return. Original cost equals 54,000 or 0.08 equals 675,000. Answer. The original cost of the property is $675,000. Question 66. Capitalization of income attributable to real property is best defined as option A, cost, option B, price, option C, present value of the property based upon its future benefits, option D, attractiveness and location. The correct answer is option C. Present value of a property based upon its future benefits. This method involves determining the value of a property based on the income it generates. The future benefits, typically in the form of rental income or other earnings, are capitalized, converted into present value using the capitalization rate cap rate. Question 67. The Real Estate Settlement Procedures Act. Real Estate Settlement Procedures Act requires that a good faith estimate of a borrower's closing costs be provided to the borrower. Option A, at the time of the loan application or within 3 business days. Option B, within 48 hours of closing. Option C, within 3 days of closing. Option D, at the time of closing. The correct answer is option A. At the time of loan application or within 3 business days. Under Real Estate Settlement Procedures Act, lenders are required to provide a good faith estimate of the borrower's closing costs either at the time of loan application or within 3 business days after the application is submitted. This helps borrowers understand the costs they will incur during the closing process. Question 68. When Floyd and his wife bought a townhouse from his wife's parents, they received only a quitclaim deed. This was most likely because option A is the type of deed often used for in-family transactions. Option B, Floyd will own the townhouse only during his wife's lifetime. Option C, Floyd and his wife own as tenants by the entirety. Option D, a mortgage was involved. The correct answer is option A. It's the type of deed often used for family transactions. A quitclaim deed is commonly used in transactions involving family members, such as transferring property between relatives. It provides no warranties or guarantees, only transferring the interest the grantor has in the property. It's a straightforward way to change ownership, which is often sufficient in familial transactions where trust exists between the parties. Question 69. The property manager forecasts expected revenues and expenses in an option A, offering memorandum. Option B, prospectus. Option C, operating budget. Option D, management agreement. The correct answer is option C,
Operating budget.
Operating budget.
An operating budget is a financial plan that forecasts expected revenues and expenses for the property. It helps property managers track the financial performance of the property and ensures that the income generated covers the operating costs. Question 70. When Anton sells his farm, which of the following will not be a part of the real estate? Option A, fences. Option B, permanent buildings. Option C, farm equipment. Option D, growing trees. The correct answer is option C.
Farm equipment.
Farm equipment is considered personal property, not real property. Real estate typically includes things that are permanently attached to the land, such as fences, permanent buildings, and growing trees. Farm equipment, on the other hand, is movable and is classified as personal property. Question 71. Marla purchased a cottage bordering a stream. The rights she has in relation to the stream are: option A, reversionary. Option B, literal. Option C, lashes. Option D, riparian. The correct answer is option D, riparian. Riparian rights refer to the rights of landowners whose property borders a river, stream, or other flowing body of water. Marla, having purchased a cottage bordering a stream, would have riparian rights related to that stream. Question 72. Ryan is an agent working for a broker named Donald, but recently became an agent under another broker named Carla. Ryan had 5 listings he brought to Donald prior to transferring. What happens to the 5 listings? Option A, the listings transferred to Carla. Option B, the listings are terminated. Option C, the listings would be split between Donald and Carla. Option D, the listings stay with Donald. The correct answer is option The
D.
listings stay with Donald.
Listings are typically tied to the broker, not the agent. Since the listings were brought to Donald before Ryan transferred to Carla, they remain with Donald's brokerage unless otherwise specified in the listing agreement. Question 73. A real estate broker must report any cash deposit that is more than: option A, $5,000. Option B, $10,000. Option C, $15,000. Option D, $20,000. The correct answer is option B, $10,000 under the Bank Secrecy Act. Real estate brokers must report any cash deposit over $10,000 to the Internal Revenue Service. This is done through a Currency Transaction Report (CTR). Question 74. Matthew signed a 120-day listing with Fair Realty. After 80 days, Matthew decided not to sell. He told Fair Realty he no longer wanted them to market his house. When is the agency of Fair Realty terminated? Option A, on the 121st day. Option B, after a reasonable time. Option C, on the 81st day. Option D, when the listing expires. The correct answer is option D. When the listing expires, the agency relationship typically terminates when the listing expires, unless the seller formally withdraws from the agreement before the expiration. In this case, since Matthew informed Fair Realty that he no longer wanted them to market his house after 80 days, if there was no clause allowing early termination by the seller, the agency would still be in effect until the 120-day period ends unless both parties agree to terminate it earlier. Question 75. Caveat emptor is a principle that states if the purchaser buys a faulty title, the responsibility for the problem lies with: option A, the buyer. Option B, the seller. Option C, the broker. Option D, the abstractor. The correct answer is option A, the buyer. Caveat emptor is a Latin term meaning let the buyer beware. It is a legal principle that places the responsibility on the buyer to inspect and beware of any issues or defects with the property they are purchasing, including the title. If the buyer purchases a property with a faulty title, the responsibility typically lies with the buyer unless the seller made specific misrepresentations or fraud occurred. Question 76.
The Americans with Disabilities Act of 1990 would affect which of the following? Option A, multi-family home with 3 units. Option B, a single-family home. Option C, an existing business with 30 employees. Option D, a third-floor apartment in a newly constructed apartment complex. The correct answer is option C.
An existing business with 30 employees.
The Americans with Disabilities Act of 1990 primarily affects public accommodations, commercial facilities, and services. It requires businesses with 15 or more employees to provide access to individuals with disabilities. Since the question mentions an existing business with 30 employees, the business must comply with Americans with Disabilities Act regulations regarding accessibility, such as ensuring that facilities are accessible to people with disabilities. For the other options, a multifamily home with 3 units and a single-family home are generally not subject to the Americans with Disabilities Act unless they are used for public purposes or have commercial aspects. A third-floor apartment in a newly constructed apartment complex would need to meet Fair Housing Act requirements for accessibility, but not the Americans with Disabilities Act, unless it is a public or commercial building. Question 77. A developer retains agent Susie to sell townhouses. Joey, a licensed agent, submits an offer to buy Unit 1603 for $120,000, and a sales contract is executed. Through a typographical error, however, the contract identified Unit 1602, which was listed for $150,000. This contract would fall under which category? Option A, void. Option B, voidable. Option C, enforceable. Option D, invalid. The correct answer is option B.
Voidable.
A voidable contract is one that may be legally unenforceable due to a mistake, but the party who made the mistake has the option to either enforce the contract or void it. In this case, the contract contains a typographical error regarding the unit number, which creates ambiguity. The party who was affected by the mistake in this case, likely the buyer or seller, may choose to void the contract, but until a decision is made, the contract could potentially be enforced. Question 78. Marcus submits an offer to purchase a home from Iris. Iris, wishing to keep the foyer chandelier, adds to the contract the words foyer chandelier not included before signing and returning it to Marcus. Is the contract binding? Option A, yes, Iris only made an insignificant change. Option B, no, Iris rejected Marcus' offer, and to be binding, Iris' counteroffer must now be accepted by Marcus without further change. Option C, no, Iris rejected Marcus' offer. Option D, no, to be binding, Iris' counteroffer must now be accepted by Marcus without further change. The correct answer is option B.
The correct answer is no.
Iris rejected Marcus' offer, and to be binding, Iris' counteroffer must now be accepted by Marcus without further change. No, Iris rejected Marcus' offer, and to be binding, Iris' counteroffer must now be accepted by Marcus without further change. Iris made a change to Marcus' original offer by adding the phrase foyer chandelier not included, which constitutes a counteroffer rather than an acceptance. A counteroffer rejects the original offer and introduces new terms. Therefore, Marcus would need to accept Iris' counteroffer exactly as it is without further changes in order for a binding contract to exist. Question 79. Anthony is in contract with a broker to sell his property. Anthony's contract with the broker states that he will pay a commission to the broker that sells the property. What type of agency agreement does this best describe? Option A, exclusive agency listing agreement. Option B, net listing agreement. Option C, exclusive right to sell listing agreement. Option D, open listing. The correct answer is option A, exclusive agency listing agreement. Exclusive agency listing agreement. The seller agrees to pay the broker a commission if the broker is the one to sell the property. However, if the seller sells the property on their own without the broker's help, they don't owe the broker a commission. This is different from an exclusive right to sell listing agreement, where the broker is entitled to a commission no matter how the property is sold, even if the seller finds the buyer themselves. Question 80. Philip, the licensed agent, had a written representation agreement with the buyer but was paid 4% of the selling price at the closing by the seller. Under these circumstances, the broker was acting as Option A, an agent for the seller. Option B, an agent for the buyer. Option C, a dual agent. Option D, none of the above. The broker violated real estate law and risks license suspension or revocation. The correct answer is option C. A dual agent is a broker who represents both the buyer and the seller in the same transaction. In this scenario, Philip had a written representation agreement with the buyer indicating he was working for the buyer but received a commission from the seller, which is typically how a seller's agent gets paid. This suggests that Philip was acting as a dual agent, representing both parties in the transaction. Question 81. Which statement is true about down payments under the Federal Housing Administration? Federal Housing Administration. Option A. Down payments are 10%. Option B. Down payments are not required. Option C. Down payments can be as low as 3%. Option D. Down payments are normally 20%. The correct answer is option C. Down payments can be as low as the Federal Housing Administration. Federal Housing Administration insures loans made by approved lenders to borrowers with low to moderate incomes. One of the benefits of a Federal Housing Administration loan is the lower down payment requirement. Typically, Federal Housing Administration loans require a down payment as low as 3.5%. But this option isn't listed here, so the closest correct answer is 3%, which reflects the general idea of low down payments offered under Federal Housing Administration guidelines. Question 82. A bank letter to the borrower saying that it will fund a mortgage loan is known as a Option A. Rate lock. Option B. Pre-approval. Option C. Pre-qualification. Option D. Mortgage commitment. The correct answer is option D. Mortgage commitment. Mortgage commitment is a formal letter from a lender stating that it will fund a mortgage loan to the borrower, typically after the lender has reviewed the borrower's financial situation and the property in question. This letter serves as a guarantee of funding, subject to final conditions. In question 83, Tommy, the licensed broker, sells a house and receives a commission of $21,600, which is 6% of the sale price. What is the sale price? Option A, $315,000. Option B, $360,000. Option C, $225,000. Option D, $290,000. The correct answer is option B. The correct answer is $360,000. Sale price equals commission or commission rate. The commission is $21,600. The commission rate is 6% or 0.06 in decimal form. Sale price equals $21,600 or 0.06 equals $360,000. So the sale price is B, $360,000. Question 84. A 50 feet by 125 feet lot zone for commercial use was sold for $455,000. What was the price per square foot? Option A, $72.80. Option B, $69.70. Option C, $75.75. Option D, $70.25. The correct answer is option A. The correct answer is $72.80. To find the price per square foot, we need to first calculate the area of the lot and then divide the sale price by the area. Calculate the area of the lot. Area equals length times width equals 50 times 125 of equals 6,250 sq. Divide the sale price by the area. Price per square foot equals sale price or area equals 455,000 or 6,250 equals 72.80. So The price per square foot is A. $72.80. Question 85. Per capita and household income are significant determinants of land and its value and falls under the following category of forces affecting real estate value. Option A, economic financial. Option B, physical and environmental. Option C, political governmental legal. Option D, sociological. The correct answer is option A. Economic, financial, and household income are economic factors that influence the demand for land and property, which in turn affects its value. Economic and financial forces include factors like income levels, employment rates, and the availability of financing, all of which play a crucial role in determining the value of real estate. Question 86. By comparative market analysis resembles which approach to real estate valuation? Option A, income. Option B, sales comparison. Option C, cost. Option D, estimate. The correct answer is option B. Sales comparison. Comparative market analysis. Comparative market analysis is a method used by real estate professionals to estimate the value of a property by comparing it to similar properties that have recently sold in the same area. This approach is closely related to the sales comparison approach to real estate valuation, which is commonly used in appraisals. Question 87. At closing, the title company will ask the seller to sign a document assuring that there have been no judgments, bankruptcies, or divorces involving the seller since the date of the title examination. What is the name of that document? Option A, evidence of title. Option B, title insurance policy. Option C, abstract of title. Option D, affidavit of title. The correct answer is option D. Affidavit of title. An affidavit of title is a document that the seller signs at closing to confirm that there have been no changes in their legal status, such as judgments, bankruptcies, or divorces since the title examination. It helps to ensure that the title remains clear and that there are no undisclosed issues affecting the property. Question 88. Midborough Property Management is contracted to receive 10% of the monthly rental income collected at the Dunbar Apartments. The monthly rent roll for the property is $55,000. One tenant only paid $250 of his $1,000 monthly rent, and 3 tenants skipped out on their $1,000 monthly rents. How much is Midborough Property Management owed? Option A, $5,125. Option B, $5,200. Option C, $5,400. Option D, $4,825. The correct answer is option A. The correct answer is $5,125. Calculate the total expected rent roll. The rent roll for the property is $55,000 per month. Account for the unpaid rent. One tenant paid $250 of their $1,000 rent, so the unpaid portion is $750. 3 tenants skipped out on their $1,000 monthly rents, so the unpaid portion for these tenants is $3,000. 3x $1,000. Total unpaid rent equals $750 plus $3,000 equals $3,750. Calculate the amount of rent collected. Collected rent equals $55,000. $3,750 equals $51,250. Calculate the management fee. 10%. Management fee equals 10% of $51,250 equals $5,125. So, Midborough Property Management is owed a $5,125. Question 89. An abstract of each tenant's existing lease and a description of the property's curb appeal are maintained in a property manager's. Option A, management agreement. Option B, prospectus. Option C, market analysis. Option D, property analysis. The correct answer is option D, property analysis. A property analysis includes details such as an abstract of each tenant's existing lease and a description of the property's curb appeal, as it involves evaluating the overall condition and performance of the property. Question 90. When Charles does not assert his rights when there is an encroachment on his property, such as a neighbor's garage straddling his property line, this is called option the doctrine of lashes, option B, statute of limitations, option C, Parole evidence rule, option D, general obligations law. The correct answer is option A, doctrine of lashes. The doctrine of lashes refers to the failure to assert a right or claim in a timely manner, leading to a presumption that the claim has been waived or abandoned. In this case, Charles' failure to assert his rights regarding the encroachment could be seen as applying the doctrine of lashes. Question 91. Which is not considered chattel? Option A, tractor. Option B, barn. Option C, curtains. Option D, trade fixture. The correct answer is option B. A barn is considered real property because it is a structure that is permanently attached to the land. In contrast, chattel refers to movable personal property, such as a tractor, curtains, or trade fixtures, which can be removed from the land or structure. Question 92. A broker may legally pay all or part of a real estate commission to option a seller, option B, the broker's own sales agent, option C, a buyer, option D, a friend who refers a listing lead. The correct answer is option B, the broker's own sales agent. A broker may legally pay a commission to their own sales agent as long as the payment is consistent with the terms of the agent's employment or independent contractor agreement. However, a broker cannot pay commissions to a seller, a buyer, unless it's a rebate under specific circumstances, or a friend without meeting the proper legal requirements and regulations regarding compensation. Question 93. Janice, an unlicensed agent, canvasses homeowners by phone to see if they are interested in selling their homes. Charlie, who is licensed, gives Janice $100 for every lead she turns up. Does this violate license law? Option A, no, because the gift is not more than $250. Option B, no, because Janice does not actually list or sell property. Option C, yes, because Shelley is paying compensation for services that require licensure. Option D, yes, because Janice is using the home telephone with no broker's sign outside her house. The correct answer is option C. Yes, because Shelley is paying compensation for services that require licensure. In most states, paying compensation to an unlicensed person for activities that require a real estate license, such as soliciting potential sellers or buyers, is a violation of license law. Janice is performing actions that could be considered real estate brokerage activities, which must be conducted by a licensed individual. Therefore, Shelley's payment to Janice is not legal. Question 94. Commissions are usually earned when option A, the buyer makes a purchase offer. Option B, the seller accepts the buyer's offer without conditions. Option C, the lender commits to funding the loan. Option D, the title to the property is searched. The correct answer is option B. The seller accepts the buyer's offer without conditions. Commissions are generally earned when a legally binding agreement is made between the buyer and seller, which often happens when the seller accepts the buyer's offer without conditions. This creates an enforceable contract, triggering the right to commission for the broker who facilitated the deal. Question 95. To qualify for innocent landowner immunity, the owner must not have had either actual or constructive knowledge of damage on the property, and at the time of purchasing the property, must have option A, request an environmental survey from the mortgage lender. Option B, obtained a phase I assessment of the property. Option C, shown due care to determine that the property was not damaged. Option D, owned the property for 1 year or less. The correct answer is option B. Obtained a phase-by assessment of the property. In order to qualify for innocent landowner immunity, the property owner must demonstrate that they took steps to investigate potential contamination on the property, such as obtaining a phase-by environmental site assessment (PSA). This assessment helps show that the owner did not have knowledge of any hazardous conditions when they acquired the property. Question 96. Richard, an agent, declines to show a Muslim family a house in a neighborhood because he feels the area isn't Muslim friendly. This is known as what? Option A, redlining. Option B, good faith exemption. Option C, steering. Option D, block dusting. The correct answer is option C. Steering refers to the illegal practice of guiding potential home buyers to or away from certain neighborhoods based on their race, religion, or other protected characteristics. In this case, Richard is improperly influencing the Muslim family's housing choices based on his own biased beliefs about the neighborhood, which is considered steering. Question 97. An earnest money deposit, if offered, is given to the broker at the time a sales contract is authorized by the seller and presented to the buyer. Absent any specific instructions in the sales contract, the broker has a legal responsibility to: Option A, deposit the check in the broker's special account. Option B, deposit the check in the broker's operating account. Option C, hold the check in the transaction file until closing. Option D, put the check in the broker's fireproof safe. The correct answer is option A. Deposit the check in the broker's special account according to real estate law. Earnest money deposits are typically required to be placed in a special escrow or trust account that is separate from the broker's operating account. This ensures the funds are properly handled and safeguarded until the closing of the transaction. Question 98. An option A, makes the seller liable for a commission. Option B, permits the optioner to complete a purchase if the optionee so elects. Option C, keeps an offer open for a specified time. Option D, gives the optionee ownership of the property. The correct answer is option C. Keeps an offer open for a specified time. An option is a contract that gives the optionee, the person receiving the option, the right, but not the obligation, to purchase the property within a specified period at a predetermined price. The optioner or the person granting the option is obligated to sell if the optionee decides to exercise the option. However, the option does not transfer ownership unless the optionee exercises the right to buy. Question 99. Dennis is mentally incompetent and has a court-appointed guardian. Dennis enters into a contract to buy a house from Dory, an adult. Which statement is true? Option A, Dennis or Dory can void the entire contract any time before the transaction is closed. Option B, the contract of sale is void. Option C, Dennis can void any portion of the contract any time before the transaction is closed. Option D, Dennis can void the entire contract any time before the transaction is closed. The correct answer is option D. Dennis can void the entire contract any time before the transaction is closed. Since Dennis is mentally incompetent and has a court-appointed guardian, he lacks the capacity to enter into a binding contract. As a result, the contract is voidable by Dennis or his guardian at any time before the transaction is completed. The contract is not automatically void but can be voided at his discretion due to his lack of legal capacity to contract. Question 100. An enforceable agreement between competent parties in which each party acquires a benefit or right is called A. Option A, certiorari. Option B, consideration. Option C, contract. Option D, clause. The correct answer is option C. Contract. A contract is an enforceable agreement between competent parties in which each party acquires a benefit or right. It involves mutual assent, consideration, and legal capacity. Question 101. Private mortgage insurance. Private mortgage insurance is required for conventional loans when the following occurs. Option A, the loan-to-value amount is greater than 80%. Option B, The loan is classified as a conforming loan. Option C. The loan-to-value amount is less than 80%. Option D. The loan is classified as an interest-only loan. The correct answer is option A. The loan-to-value amount is greater than 80%. Mortgage insurance. Private mortgage insurance is typically required for conventional loans when the loan-to-value ratio is greater than 80%, meaning the borrower is financing more than 80% of the home's value. Private mortgage insurance protects the lender in case the borrower defaults on the loan. Question 102. Which of the following instruments is used to pledge property as security for the repayment of a home loan? Option A. Bond. Option B. Mortgage. Option C. Deed. Option D. Lease. The correct answer is option B. Mortgage. A mortgage is the instrument used to pledge property as security for the repayment of a home loan. It gives the lender a legal claim to the property if the borrower fails to repay the loan according to the terms. Question 103. Erica purchased her house for $330,000 and sold it a few years later for $425,000. What was Erica's rate of profit? Option A. 21.21%. Option B. 78.78%. Option C. 61.32%. Option D. 28.78%. The correct answer is option D. The correct 28.78%. Rate of profit equals selling price minus purchase price, or purchase price times 100. Substitute the values into the formula. Rate of profit equals 425,000 minus 330,000, or 330,000 times 100. Rate of profit equals 95,000, or 330,000 times 100. Rate of profit equals 0.2879 times 100. Rate of profit equals D. 28.78%. Question 104. A country home sold for $385,000. The broker received $30,800. What rate of commission did this broker charge? Option A. 8%. Option B. 8.5%. Option C. 10%. Option D. 14%. The correct answer is option A. The correct answer is 8%. Commission rate equals broker's commission, or sale price times 100. Substitute the values into the formula. Commission rate equals 3,800, or 385,000 times 100. Commission rate equals 0.08 times 100. Commission rate equals 8%. Question 105. The gross income of an office building is $122,000. Operating expenses are $70,000. The capitalization rate is 10%. What is the value estimate? Option A. $520,000. Option B. $420,000. Option C. $1,220,000. Option D. $720,000. The correct answer is option A. The correct answer is $120,000. Value equals net operating income. Net operating income, or capitalization rate. First, we need to calculate the net operating income. Net operating income, which is the gross income minus operating expenses. Net operating income equals gross income minus operating expenses. NOI equals 122,000 minus 70,000 equals 52,000. Now, we apply the formula. Value equals 52,000, or 0.10 equals 520,000. So, the value estimate is A. $520,000. Question 106. Zoning or deed restrictions on physical development fall under which category of forces affecting real estate value? Option A. Economic financial. Option B. Physical and environmental. Option C. Political governmental legal. Option D. Sociological. The correct answer is option C. Political govern. Political govern. Mental legal. These are laws, mental legal regulations, and restrictions set by mental authorities that affect how property can be used or developed. Question 107. Edwin sold Barry a parcel of land. Title has passed, but to date Barry has not paid the purchase price in full as originally agreed. If Edwin does not receive payment, which could he use to enforce the payment? Option A. Mortgage lien. Option B. Vendee's lien. Option C. List pendants. Option D. Vendor's lien. The correct answer is option D. Vendor's lien. Vendor's lien is a legal claim that a seller-vendor may place on a property if the buyer-vendee has not paid the full purchase price, even after title has passed. This allows the seller to enforce payment through legal means. Question 108. The property manager is responsible for maintaining the value of the property while option A. Minimizing turnover. Option B. Minimizing capital expenses. Option C. Maximizing income. Option D. Maximizing occupancy. The correct answer is option C. Maximizing income. The property manager is responsible for maintaining the value of a property by maximizing income, which involves managing rents, minimizing vacancies, and controlling costs while keeping the property well maintained. Question 109. Curb appeal refers to option A. The condition of the curbs and streets along a property. Option B. The sewer and drainage systems along a property. Option C. The usable square footage of a property. Option D. The exterior appearance of a property. The correct answer is option D. The exterior appearance of a property. Curb appeal refers to how attractive and inviting the exterior of a property looks when viewed from the street. It plays a key role in a potential buyer's first impression of a home. Question 110. What is the purpose of a deed? Option A. To pledge property as collateral for a mortgage loan. Option B. To convey property ownership from one person to another. Option C. To remove a vendor's liens from a property. Option D. To acknowledge a contractual agreement. The correct answer is option D. To convey property ownership from one person to another. A deed is a legal document used to transfer ownership of real property from the seller grantor to the buyer-grantee. It serves as evidence of the transaction and includes essential details like the description of the property and the parties involved. Question 111. The most complete type of ownership in real estate is option A. Leasehold. Option B. Life estate. Option C. Qualified fee. Option D. Fee simple. The correct answer is option D. Fee simple. Fee simple. Fee simple ownership represents the most complete form of real estate ownership, giving the owner full rights to use, lease, sell, or transfer the property without conditions unless subject to zoning laws or deed restrictions. Question 112. When an agent represents the buyer and not the seller of a property, he or she is engaging in option A. Buyer protection. Option B. Good faith. Option C. Buyer agency. Option D. Seller protection. The correct answer is option
Buyer
C.
agency. When an
agent represents the buyer and not the seller, they are acting as a buyer's agent, meaning they owe fiduciary duties to the buyer, such as loyalty, confidentiality, and full disclosure. Question 113. James lists his house with Sam, the licensed broker. James offers a bonus commission of $500 to the agent who brings a good buyer before May. Samantha, a licensed agent, who is associated with the cooperating firm of Tommy Lang, effects the sale on April 1. Who will receive the commission? Option A. Don. Option B. Tommy Lang. Option C. Samantha. Option D. No one. The correct answer is option C. Samantha. Samantha, as the agent who brought the buyer and effected the sale, is entitled to the commission. However, $500 bonus would typically go to the agent who secured the sale, which in this case is Samantha. If there's a broker relationship with Tommy Lang's firm, the commission would be split according to the firm's policies, but Samantha is the one who made the sale. Question 114. Maria, the licensed broker, does not think the seller will seriously consider an offer she received for 15% less than the listing price. Maria should. Option: discourage the potential buyer from making the offer. Option B: encourage the potential buyer to increase the offer. Option C: wait until he receives more realistic offers and present all offers together. Option D: submit the offer to the seller. The correct answer is option D. Submit the offer to the seller. As a broker, Maria has a legal and ethical obligation to present all offers to the seller, regardless of whether she believes the offer is reasonable. It is up to the seller to decide whether or not to accept or reject the offer. Question 115. In order to successfully sue a broker for misrepresentation, a buyer must be able to prove that. Option: the buyer asked the broker to verify the misinformation. Option B: the misinformation is in writing. Option C: the buyer was damaged from relying on the truth of the statement. Option D: the seller knew of the statement. The correct answer is option C. The buyer was damaged from relying on the truth of the statement. To successfully sue a broker for misrepresentation, the buyer must prove that they relied on the false or misleading information provided by the broker, and that this reliance resulted in actual harm or damages. Question 116. According to the Department of Housing and Urban Development standards, which of the following would be an acceptable neighborhood advertisement? Option A: senior housing. Option B: traditional living. Option C: exclusive neighborhood. Option D: bachelor community. The correct answer is option A. Senior housing. According to Department of Housing and Urban Development, U.S. Department of Housing and Urban Development standards, senior housing is an acceptable neighborhood advertisement because it is specifically targeted toward older adults, which is permissible under the Fair Housing Act, provided it complies with relevant laws regarding age restrictions. Question 117. Tom, Dick, and Harry are in an escrow arrangement. Tom is buying a house from Dick, and Harry is acting as a neutral third party that will hold the deed and money. What do we call Harry? Option A: escrow agent. Option B: attorney at law. Option C: attorney in fact. Option D: agent. The correct answer is option A: escrow agent. In this scenario, Harry is the escrow agent because he is holding the deed and money as a neutral third party during the transaction between Tom the buyer and Dick the seller. The escrow agent ensures that the terms of the agreement are met before the transaction is completed. Question 118. How is the loan-to-value ratio calculated? Option A: mortgage principal remaining over the appraised value. Option B: mortgage amount plus appraised value. Option C: mortgage principal remaining minus down payment. Option D: original mortgage amount over purchase price. The correct answer is option A. Mortgage principal remaining over the appraised value. The loan-to-value ratio is calculated by dividing the remaining balance of the mortgage by the appraised value, or sometimes the purchase price, if it's lower of the property. This ratio helps lenders assess the risk of a loan, with a higher loan-to-value indicating more risk. Question 119. Which of the following statements about interest-only loans is true? Option A: the payment amount can change over the life of the loan. Option B: at the conclusion of the interest-only period, the principal is paid off. Option C: the payment amount is fixed over the life of the loan. Option D: with payment, the principal is slowly paid down. The correct answer is option A. The payment amount can change over the life of the loan. In an interest-only loan, the borrower initially only pays the interest on the loan for a specified period, usually 5-10 years. After the interest-only period ends, the loan typically transitions to a standard amortizing loan, where the borrower must start paying both principal and interest. Therefore, the payment amount can change when the principal payments begin. Question 120. What kind of collateral is used to secure a bridge loan? Option A, the debt-to-income ratio. Option B, personal signature. Option C, currently owned real estate. Option D, the real estate being purchased. The correct answer is option C. Currently owned real estate loan is a short-term loan typically used to bridge the gap between the purchase of a new property and the sale of an existing property. The collateral for a bridge loan is usually the currently owned real estate, the property the borrower is selling or has equity in. This helps secure the loan, while the borrower is in the process of completing the sale and finalizing the purchase of a new property. Question 121. If a property is listed at $150,000 and an offer of $140,000 is made to the sellers through the listing agent and signed by the interested purchaser, that offer will be option A, accepted because the agent told the owner it is well within an acceptable price range. Option B, lower than the listing price and therefore cannot be counteroffered. Option C, accepted, rejected, or counteroffered. Option D, rejected because it is too low. The correct answer is option C. Accepted, rejected, or counteroffered. An rejected or counteroffered property is a proposal made by the buyer, and the seller has the right to either accept, reject, or counteroffer the terms of the offer. The listing price is just a guide, and the seller is not obligated to accept an offer simply because it is close to the asking price. The seller can negotiate the terms by making a counteroffer if they believe the offer is too low or if they wish to adjust other terms. Question 122. Diana Dubois, a chef, rented property in order to run a restaurant in California. Dubois purchased and installed a commercial-grade range oven, deep fryer, and grill. To comply with safety regulations and protect her staff, Dubois securely fastened all of this commercial restaurant equipment to the kitchen. Which of the following is a correct statement related to the restaurant equipment Dubois installed? Option A, Dubois can remove this equipment from the property prior to the termination of the lease. Option B, Dubois can remove this equipment from the property even after the lease is over. Option C, because this equipment has been firmly affixed to the property, it is now part of the real estate. Option D, the lessor will determine whether or not Dubois can remove this equipment. The correct answer is option A. Dubois can remove this equipment from the property prior to the termination of the lease. A fixture is an item of personal property that is so firmly attached to the land or the building that it is considered part of the real estate and transfers with the deed. An important exception to this rule is the trade fixture. A trade fixture is something a tenant uses regularly in the course of the tenant's trade or business. Here, the commercial restaurant equipment that Dubois purchased and installed for her business is an example of a trade fixture that she will be able to remove legally prior to the end of the lease. Question 123. Which of the following is an example of the government's realty-related police power? Option A, the Special Weapons and Tactics Team breaking down the door of a unit in an apartment complex. Option B, a city changing the zoning from industrial to residential in an entire area. Option C, the county forcing owners out of their homes through eminent domain. Option D, the state without the prior owner's permission acquiring permanent title to realty through a sheet. The correct answer is option B. A city changing the zoning from industrial to residential in an entire area. Real estate and land use by government entity is called public control. There are four basic governmental powers over real estate ownership and land use: police power, eminent domain, taxation, and issue your memory aid is Pete. The government's police power over real estate includes things like zoning, building codes, city planning, public health, public safety, and general welfare. Answer choice B is a classic example of police power. Here, the city exercised its police power to enhance public health and safety by separating the new residential area from industrial activity. Sheet, eminent domain, and taxation are not part of the government's police power. The state examiners frequently write questions trying to trick examinees into incorrectly lumping one of these other three powers into police power. Question 124. All of the following are examples of lawful private controls on real estate except Option A. Limiting the size of the American flag homeowners are permitted to fly on their property. Option B. Forbidding paint color other than beige on the exterior of a home. Option C. Promoting diversity through restricting sales to unrepresented races. Option D. Banning people from owning large dogs weighing over 40 pounds. The correct answer is option C.
Promoting diversity through restricting sales to unrepresented races.
Private control is exercised by a non-governmental entity. This type of non-governmental control is typically found in deed restrictions or covenants, conditions, and restrictions C and RS. Private control usually runs with the land. That means the restriction binds both current and future owners. The restrictions may be limited to a single parcel of land, or they might cover an entire subdivision. In 1948, in the landmark case of Shelley versus Supreme of the U.S., Supreme Court held that the federal Constitution prohibits racially restrictive housing covenants in the United States. Therefore, limiting the sale of real estate to certain races, even with the goal of promoting diversity, is an example of illegal private control. Test-taking tip. Restricting the sale or rental of real estate on the basis of race is never legally permitted in the United States. A, B, and D are all common examples of lawful private controls. Question 125. Late one afternoon, a listing broker was holding an open house. Seeing the open house sign, a prospective buyer came in to look at the home. After several questions about the house and local school system, the inexperienced buyer asked the listing broker for suggestions on how to negotiate successfully for the residents. The listing broker answered the questions as helpfully as possible. However, because the broker was tired, the broker did not raise the issue of agency representation, compensation, or even ask for the prospective buyer's name. The following morning, the prospective buyer started to act on the listing broker's advice. What type of agency was created with the prospective buyer? Option A. Implied agency. Option B. Express agency. Option C. An agency relationship cannot be formed without first learning basic information like names. Option D. Because compensation was never discussed, no agency relationship was created. The correct answer is option A. Implied agency. In California, an implied agency can be created unintentionally or by accident and without any written formalities. By guiding the prospective buyer on the negotiation tactics needed to purchase the Wood River Drive property, the listing broker was engaging in the advisory conduct that should be reserved for clients, thus accidentally creating an implied agency relationship. Question 126. John Brown is the sole owner of a condominium in California with a list price of $900,000. The listing broker learns that a prospective buyer, Samantha Sutherland, owes $75,000 in delinquent child support. Which duty owed only to the principal will require the listing broker to disclose the delinquent child support to John Brown? Option A. Honesty. Option B. Good faith. Option C. Disclosure. Option D. Disclosure of material facts. The correct answer is option C. Disclosure. In California, disclosure is a fiduciary duty owed by an agent to a principal. Here, the agent is the listing broker and the principal is the seller. The listing broker owes the seller the disclosure of relevant and pertinent information pertaining to the listing broker's duties. One of the listing broker's duties is to counsel the seller as to a prospective buyer's ability to complete a sale. Information related to the delinquent child support must be disclosed by the listing broker to John Brown as it pertains to Samantha Sutherland's financial ability to buy the condominium. Question 127. All of the following are correct statements related to a listing broker and a broker working as a property manager in California, except option A. Both brokers owe fiduciary duties to their principals. Option B. Both brokers must supervise their associate licensees. Option C. Both brokers typically have a limited authority to bind their principals. Option D. A listing broker is a special agent, while a property manager is a general agent. The correct answer is option C.
Both brokers typically have a limited authority to bind their principals.
In California, the listing broker is a special agent employed by the seller for a particular transaction or activity to sell the property. A special agent is typically only an advisory position. So, for example, while the listing broker can solicit offers and advise the seller as to the merits of each offer, the listing broker cannot accept an offer and bind the seller. In contrast, a real estate broker working as a property manager is a general agent. As a general agent, the broker or property manager would have a limited capacity to bind the property owner, for example, hiring repair and maintenance technicians, finding and renting units to qualified tenants, collecting rent, etc. General agents are typically employed for ongoing businesses. Question 128. What type of appraisal report is commonly relied upon in California by a lender financing the purchase of a single-family residence? Option A. Self-contained report. Option B. Summary report. Option C. New subdivision public report. Option D. Home inspection report. The correct answer is option B. Summary report. Summary report is an appraisal with a level of detail sufficient for lenders financing either the purchase or the refinance of residential property. The appraiser summarizes the information included in the work file of the subject property and reports an estimate of the subject property's market value. Question 129. Kim Newton owns a 3-bedroom, 2-bathroom single-family residence in California. Newton legally converted the master bedroom and bathroom into a separate granny flat for her elderly mother. The granny flat cost $50,000 but only added $30,000 in value to the property. Several years later, Newton remodeled the kitchen in the main house. The remodeled kitchen cost $15,000 but added $20,000 in value to the property. Which of the following statements is correct? Option A. The granny flat and the remodeled kitchen are both examples of decreasing returns. Option B. The granny flat is an example of progression. Option C. The remodeled kitchen is an example of regression. Option D. None of the above statements are correct. The correct answer is option D. The correct answer is none of the above statements are correct. None of the statements are correct. That is incorrect. For the principle of contribution, the value of an improvement at a component is not what it cost, but what it adds to the subject property's value. The granny flat is an example of decreasing returns because it costs $20,000 more than it added in value. Answer choice is incorrect because the remodeled kitchen added $5,000 more in value than it cost, making it an example of increasing returns. B and C are incorrect. These answer choices incorrectly use terminology from a different principle of appraisal, the principle of conformity. For the principle of conformity, property values tend to stabilize when homes in a neighborhood are similar to each other. This principle theorizes that the value of a mansion in a neighborhood of small houses will fall, and this is called regression. By contrast, the value of a small home in a neighborhood of mansions will rise, and this is called progression. Question 130. This method of valuation is used for unique or historic properties as well as new construction. It is frequently used when comparables are unavailable and when the subject property does not produce income. In order to reach an opinion of value, the appraiser estimates the current cost to build a new improvement with the same utility, then deducts accrued depreciation before adding the value of the land. This method of valuation is called Option A, the replacement cost approach. Option B, the reproduction cost approach. Option C, the market data approach. Option D, the income approach. The correct answer is option A, the replacement cost approach. This method of valuation is called the cost approach. It involves the appraiser estimating the cost to build the improvements new, deducting for accrued depreciation, and finally, adding the value of the land. The replacement cost approach is used to estimate how much it would currently cost to build the improvements with the same utility, using today's materials and labor skills. The estimate would include a cure for any outdated design, i.e. a cure for functional obsolescence. Question 131. This security instrument is used for loans when the collateral is a parcel of real estate. It is legal, but infrequently used in California. The security instrument has only two parties and creates an encumbrance on the real estate. From the following choices, what is the security instrument called? Option A, deed of trust. Option B, promissory note. Option C, mortgage. Option D, option agreement. The correct answer is option C. Mortgage. A mortgage is a security instrument, legal, but infrequently used in California. There are two parties. The borrower is called the mortgagor and the lender is called the mortgagee. Test-taking tip. The words mortgagor and mortgagee are tested on nearly everybody's state exam. The vowels in the words can serve as your memory aid. There are two ES in mortgagee and lender, and two OS in mortgagor and borrower. Question 132. Kayla Chen and Christina Wine cannot afford the down payment on the 3-unit residence they want to purchase together in California. They turn to a government program for assistance. Chan and Wine are required to purchase mortgage default insurance, but only have to pay 3.5% of the home's appraised value as a down payment. Chan and Wine purchased the home using Option A, a conventional loan from a lender with private mortgage insurance. Option B, a direct loan from Federal Housing Administration with mutual mortgage insurance. Option C, a Department of Veterans Affairs guaranteed loan with mutual mortgage insurance. Option D, a Federal Housing Administration insured loan from the lender with mutual mortgage insurance. The correct answer is option D.
Federal Housing
Administration
insured
loan
from a lender with mutual mortgage insurance. Since it was created in the 1930s, the Federal Housing Administration Loan Program has helped millions of Americans become homeowners when they cannot afford the down payment on a 1- or 4-unit residence. When a loan is Federal Housing Administration insured, lenders will agree to a loan-to-value ratio of up to 96.5%. The test questions stating that Chen and Wang only put a 3.5% down payment on their newly purchased residence was one clue that their loan was Federal Housing Administration insured. This program of the federal government works by protecting lenders against loss in the event of borrower default. It does this through Federal Housing Administration mortgage default insurance. Borrowers must pay for Federal Housing Administration insurance, called mutual mortgage insurance. The Federal Housing Administration is not a direct lender. Borrowers would get the loan from Federal Housing Administration approved lenders. Question 133. Dwayne Smith, a 25-year-old man, is purchasing a single-family residence in a newly built subdivision of 50 parcels in California. The residence is move-in ready. Because the other 49 lots have already been sold, Smith is buying the model home in the new development. The developer offers to sell the furniture in the model home along with the real estate. Smith, in the process of getting a fully amortized loan, discusses the purchase of the furniture with his lender. What is it called if both the real estate and the furniture serve as collateral for the loan? Option A, a construction loan. Option B, a term loan. Option C, a home equity conversion loan. Option D, a package loan. The correct answer is option D. A package loan is secured not only by real estate, but also by personal property being sold with the real estate. Two examples of personal property that might be packaged with the real estate are 1. Furniture sold with model homes or vacation properties, and 2. Kitchen equipment being sold with a property used as a restaurant. Note: the legal term for personal property is chattel. Question 134. Juan Gonzalez, a veteran living in California, wanted to buy a single-family residence to live in as his home. He turned to the CalVet residential loan program in order to help finance the purchase. The financing instrument used in the CalVet loan program is an installment sales contract. Who will give Gonzalez a deed to the property? Option A,
The owner of the home prior to the curated installment sales contract. Option B, curated. Option C, the vendee. Option D, is sufficient evidence provided to answer the question. The correct answer is option D. The curated Residential Loan Program is a program available to veterans living in California to help them finance the purchase of their homes. Here is how this government program works. After the veteran has found a home he or she wants to purchase, curated will buy the property outright from the former owner and then sell it to the veteran using a financing instrument called an installment sales contract. In this government loan program, curated is the seller or vendor, and the veteran is the buyer or vendee. The installment sales contract is a form of seller financing where the seller will only give a deed to the buyer after the last payment has been made. Test-taking tip. For the state exam, make sure you remember that, under an installment sales contract, the seller is the vendor and the buyer is the vendee. The vendor holds legal title and the vendee holds equitable title throughout the installment sales contract. The buyer only receives legal title and a deed to the property when the installment sales contract has been paid in full. An installment sales contract is also referred to as a land contract or a contract for deed. Question 135. James Johnson and Echo Johnson are married to each other. The Johnsons are in the process of purchasing a condominium together in California. What is a way for them to hold titles so that, when one spouse dies, the survivor immediately owns the condominium in severalty? Option A, as tenants in common. Option B, as community property with right of survivorship. Option C, as joint tenants. Option D, both B and C. The correct answer is option B. Both B and C. Answer choice is B and C both include what's called the right of survivorship. If there's a right of survivorship and one co-owner dies, the survivor immediately through operation of law acquires the ownership interest of the deceased. Answer choice B is only available to married couples or registered domestic partners. Answer choice C is available to married couples and registered domestic partners, but is also available to unrelated or unmarried people. When title is held in a joint tenancy, there can be more than two joint tenants on title at the same time. Test-taking tip. Ownership in severalty is ownership with one sole owner on title. Question 136. The escrow closing statement for a typical purchase transaction sets forth the debits and credits for both the buyer and the seller. Which of the following statements is correct? Option A, a debit to the buyer might include a new mortgage. Option B, a debit to the seller might include prepaid property taxes. Option C, a credit to the buyer might include buyer-paid discount points. Option D, a credit to the seller might include the property sale price. The correct answer is option D. A credit to the seller might include the property sale price. The escrow closing statement sets forth what each party must pay or will receive prior to the completion of the purchase transaction. A debit is what a party must pay to complete the purchase transaction successfully. A credit is what a party will receive prior to the transaction closing. The property sale price is typically a credit the seller will receive before the close of escrow. Question 137. Two brokers secretly decide their brokerage firms will charge the same commissions and fees in California. They also quietly decide which counties each firm will service. These practices are illegal under Option A, the Federal Equal Credit Opportunity Act. Option B, the Federal Sherman Antitrust Act. Option C, the California Attorney Broker Professional Conduct Act. Option D, the California Fair Employment and Housing Act. The correct answer is option B, the Federal Sherman Antitrust Act. These practices are in violation of the Federal Sherman Antitrust Act. This federal law prohibits the anti-competitive behavior shown by the brokers in the test question, for example, collusion, price fixing, and dividing up territories. California has its own antitrust legislation, the Cartwright Act. Antitrust violations under federal and California state law can result in, among other things, monetary fines or imprisonment. Question 138. 2 years ago, a tenant died in Unit 7 of an apartment complex in California. The unit is vacant, and the landlord shows a prospective tenant for the property. The landlord informs the prospective tenant that a previous tenant died in the unit 2 years ago from AIDS-related complications. Which of the following is a correct statement? Option A. Disclosure of a death on a property is only required for sales, not rentals. Option B. The landlord properly disclosed the death, but improperly disclosed the AIDS-related cause of death. Option C. The landlord properly disclosed the death, but disclosing a cause of death is never allowed. Option D. Disclosure of a death on a property is only required if it occurred within the past year. The correct answer is option B. The landlord properly disclosed the death, but improperly disclosed the AIDS-related cause of death. In California, a death on a property being sold, leased, or rented must be disclosed if it occurred within the past 3 years. However, if the death was from AIDS or HIV-related, the cause of death should not be disclosed. Under California Civil Code Section 1710.2, it is not even considered a material fact that an occupant was HIV positive or died from AIDS-related complications. Additional protection for those afflicted with AIDS or HIV positive can be found in the Federal Fair Housing Act amendments of 1988. The 1988 amendments categorized being afflicted with AIDS or being HIV positive as a handicap or disability. Because this affliction is considered a handicap or disability, the disclosure is considered discrimination against the handicapped or disabled and is in violation of federal fair housing laws. Question 139. Which of the following is a lawful brokerage firm practice? Option A. Keeping $250 of the brokerage firm's money in the client trust account. Option B. Removing an earned commission from the client trust account after 60 days. Option C. Supervising associate licensees who were hired as independent contractors as employees. Option D. Steering. The correct answer is option C. Supervising associate licensees who were hired as independent contractors as employees. Under California real estate law, an associate licensee, a salesperson, or a broker associate is legally considered an employee of the hiring broker. Hiring an associate licensee as an independent contractor is relevant for tax and insurance purposes, but it does not alter the level of supervision the broker of record must exercise over every associate licensee, whether they are hired as employees or as independent contractors. Question 140. Jordan Smith is the broker of record at a brokerage firm in California with 5 associate licensees. All 5 associate licenses are very experienced salespeople. A mental health condition causes Smith to be incapacitated and hospitalized for long-term treatment. What is the status of the listing agreements at Smith's brokerage firm? Option A. The experienced associate licensees will handle the realty-related work at the brokerage firm. Option B. Smith's mental incapacity terminates the listing agreements. Option C. The associate licensees can continue to service the listing agreements subject to supervision by the DRE. Option D. Provided the salesperson is shown as a party to the listing agreement, that specific salesperson can continue to service his or her clients. The correct answer is option B. Smith's mental incapacity terminates the listing agreements. Smith's mental incapacity terminates the listing agreements at this brokerage firm. Test taken tip. Remember that the listing agreement is a contract between 2 parties, the seller and the broker for the seller. Death, mental incapacity, or bankruptcy of either the seller or the seller's broker will terminate the listing agreement. Question 141. All of the following contracts must be in writing to be enforceable in California except Option A. A lease of a parcel of real estate for a term of 1 year. Option B. A purchase and sale agreement for real estate. Option C. A listing agreement. Option D. An agreement by a buyer to pay a loan secured by a lien upon the real estate purchased. The correct answer is option A.
A lease of a parcel of real estate for a term of 1 year.
In California, the statute of frauds requires that certain contracts be in writing in order to be enforceable. A lease is a contract between the landlord and the tenant, and any lease with a term that is longer than 1 year must be in writing, for example, 1 year and 1 day. However, a lease of real estate for a term of 1 year or less does not need to be in writing. Test-taking tip. Before the state exam, make sure to review the statute of frauds so that you know which contracts must be in writing to be enforceable.